Inflation is a term we hear often, but what does it really mean for our everyday lives? Simply put, inflation is the gradual increase in the price of goods and services over time. This means that the money in your wallet slowly loses its purchasing power. For example, if annual inflation is 5%, something that costs $100 today will cost $105 next year. Over time, this effect compounds, making it harder for families to save and plan for the future. Recent years have seen inflation rise faster than in previous decades, driven by aggressive monetary policies, global supply chain disruptions, surging demand, and geopolitical tensions. As a result, many people are searching for new ways to protect their wealth from being eroded by inflation. Bitcoin emerged in 2009 as a decentralized digital currency, offering a radically different approach to money. Unlike traditional currencies issued by central banks, Bitcoin operates independently of any government or institution. One of its most important features is its limited supply. Only 21 million Bitcoins will ever exist. This built-in scarcity is designed to prevent inflation through overproduction, a problem that can plague traditional fiat currencies like the United States dollar or the euro. Bitcoin's network is maintained by a global community, with no single authority in control. Transactions are recorded on a transparent public ledger known as the blockchain, which is nearly impossible to tamper with. Anyone with an internet connection can participate, making Bitcoin borderless and permissionless. These characteristics have led supporters to describe Bitcoin as digital gold, a store of value immune to government interference. Why do some people believe Bitcoin can protect against inflation? The argument centers on a few key points. First, scarcity. Unlike fiat currencies that can be printed in unlimited quantities, Bitcoin's supply is capped. Central banks cannot manipulate Bitcoin's supply through monetary policy. Second, as more people and institutions adopt Bitcoin, demand could increase, potentially driving prices higher. In theory, these factors could make Bitcoin a safe haven during periods of rising prices. Supporters argue that Bitcoin's decentralized nature and transparent supply make it a better alternative to traditional currencies, especially when governments are printing money at unprecedented rates. The hope is that, as adoption grows, Bitcoin will become a reliable way to preserve wealth in the face of inflation. However, Bitcoin's track record reveals a major challenge: extreme volatility. For example, between 2017 and 2018, Bitcoin's price plummeted from nearly $20,000 to under $4,000. In 2021, it surged past $60,000, only to crash below $20,000 again in 2022. Even within a single day, Bitcoin's price can swing by double-digit percentages. This unpredictability raises important questions. Can something so volatile really act as a stable store of value? How can investors maintain confidence in an asset whose price can halve in just a few months? For comparison, gold has served as a hedge against inflation for thousands of years, while Bitcoin has existed for just over a decade. This lack of a long-term track record makes some investors wary of relying on Bitcoin as a safe haven. Another factor to consider is adoption and regulation. While Bitcoin use has grown, it is still far from universally accepted. Most people do not use it for daily purchases, and many businesses have yet to embrace it as a payment method. On the regulatory front, governments around the world are paying closer attention to cryptocurrencies. Some countries have banned them outright, while others have imposed strict rules. Regulatory changes can have a significant impact on Bitcoin's price and liquidity, adding another layer of uncertainty for investors. The evolving legal landscape means that Bitcoin's future as a mainstream asset is still very much in question. Bitcoin does offer some clear advantages as a potential hedge against inflation. Its limited supply cannot be diluted by central banks, and it is global, digital, and accessible 24 hours a day, 7 days a week. There is also growing institutional interest, with some companies adding Bitcoin to their balance sheets. If adoption continues to rise, there is potential for high returns. However, there are significant drawbacks to consider. High volatility undermines its role as a stable store of value. Regulatory uncertainty and the risk of government crackdowns remain ever present. Cybersecurity risks, such as hacks and the loss of private keys, can result in permanent loss of funds. Finally, Bitcoin's limited history compared to traditional hedges like gold means it is still an experimental asset. So, what do the experts say? Opinions are split. Some analysts argue that Bitcoin is the best hope against the debasement of fiat currencies. Others warn that treating it as a safe haven is premature, given its price swings and adoption challenges. In reality, Bitcoin remains an experimental asset in the early stages of global adoption. If you are considering adding Bitcoin to your portfolio, proceed with caution. Invest only what you can afford to lose, diversify with other assets, and stay informed about regulations in your country. Do your own research and weigh the risks and rewards carefully. Is Bitcoin a genuine shield against inflation, or just another speculative bubble? The answer may depend on how the story unfolds in the years ahead.